Tim Annis, head of sales for a company called Blue Chain. We work in the request to pay space. We're a technology company. We're launching in the UK at the moment.
I'm Tina Harrison. I'm a Professor of Financial Services Marketing and Consumption at the University of Edinburgh Business School. I have a particular interest in research around consumers and financial services and vulnerability. And in that role, I have worked a lot with organisations like the Money and Pension Service, and also currently doing quite a bit of work with young enterprise around financial education.
What is Edinburgh University's focus on financial inclusion and how has it come about?
Well, I suppose first of all, I should say as a university, we have a values-led strategy, which means that we try to drive social impact in all of our research in some way or other. And as a business school, we have a particular focus on the financial sector. And within that, my research fits within that around financial inclusion and understanding vulnerable consumers particularly. And I've had a long-standing interest in this area that really started with my own PhD about 30 years ago now, which was looking at understanding different types of consumer behaviours in relation to financial services. And I have a particular interest broadly in understanding how we can improve effective consumer behaviours to equip consumers to deal with the complexities of financial matters. And financial inclusion is therefore a key element of that. And for me, financial decisions, is something that affects all of our lives. It's, you can't escape financial decisions every day, but also we know that all consumers generally are often poorly informed and susceptible to making poor financial decisions. And so understanding what we can do to help consumers make more effective decisions is really part of what I'm interested in. And also making sure that individuals are not excluded from mainstream financial services in a way that pushes them to higher cost or less ethical forms of credit, as an example, and trying to support individuals to be part of the mainstream financial services sector.
You're involved in a credit union, I believe, and it'd be really interesting to understand what the role credit unions play in providing affordable credit, but also I can imagine that they're not necessarily at the forefront of technology and similar. So is there ways that could perhaps be improved as we go into the later 21st century?
Yes, I am involved in a credit union as a board member, and I wanted to get involved because I think credit unions do have a central role to play, particularly around affordable credit. They operate at a very local community focused level, and the common bond that defines credit unions means that they understand their members an awful lot more. They're able to give much more personalised and an individualised service to their members and understand their financial circumstances. Credit unions are also, their interest rates are capped, which many people often don't know. So from a borrower's point of view, in terms of affordable credit, there is a cap to the amount that credit unions can actually charge for their lending. But as you've indicated, they're not at the forefront in terms of using technology. They're also not very well known. There's around just under 300 credit unions in the UK, serving around 1.5 million people. So that averages out about 5,000 people per credit union. So they're relatively small, or very small in some cases, organisations. So whilst the potential is there, the impact is actually pretty small compared with other countries internationally. So in the USA, for example, there's about 55% penetration rate amongst credit unions. So they're much more widely used than they are in the UK. So we often talk about credit unions as actually being a well-kept secret. And I think that is part of the problem, that not many people know about them. So I think in terms of improving the impact of credit unions, there is a need to increase the awareness of them, increase the what the consumer understanding of credit unions, even if people are aware of them, they're not really sure exactly what they do and if they're relevant for them. And also in terms of, as you said, the technology, they're not at the forefront of technology. And part of that is the size of credit unions. They often don't have the resources to access the technology. But if they want to widen their base as they really need to, and also attract a younger target market, because most of the users of credit unions are in the older demographic. They really need to be tapping into technology in order to compete with some of the other more attractive lenders that are out there at the moment.
With anything to do with financial inclusion, there is often a big focus on the young adult market. So, the market that is to be, I suppose, and is coming into play post-university and similar, particularly within the affordable credit sector. So what would you see as their specific needs, and what do you feel the industry can do to encourage financial resilience in that sector?
I suppose maybe I should start by saying a little bit about what some of the problems are that young adults kind of face in terms of managing their own money. And I've done quite a lot of research in this area for the Money and Pensions Service. So young adults, they're amongst the lowest level of financial resilience. They're least confident in managing money and least knowledgeable about financial matters. And this has been shown consistently in various research that I've done and others. And we also know that they are amongst the most likely to turn to risky credit options like payday lenders when they are looking to borrow money. So in that sense, they are the most financially vulnerable for their age group. So I think there are various things that can be done to try and improve this. I mean, I think there's more effective financial education is needed at all levels. And young people have asked for that and are recognizing that in various research that I've done myself. But I think also more importantly and crucially as well, there's more advice and guidance needed at point of sale. And I think an onus on lenders really to help young people understand, what they're using the credit for, and giving them really an opportunity to think about whether the credit options that they're using are appropriate for the particular purposes that they're using them for at that point in time.
Obviously, we've just gone through a global trauma in COVID. How do you think it's going to evolve over the next year in terms of those debt positions, and what do we need to do perhaps in the payment space to try and help educate people? Is there things that we could be doing as the EPA, as individual businesses, as government, whatever, to try and help people, particularly now, not fall into that deadly spiral?
From conversations I've been part of with people in the kind of debt advice space, I think there's a general acceptance that debt is going to increase, and the need for debt advice is going to increase as well. The problem with that is that people tend to only seek debt advice once they're in situations that are really beyond recover. So I think what is really needed is to try and understand and spot problems, if we can, before they become issues where consumers are really out of control with debt and really need to go into kind of debt management and those sorts of things, which is where the kind of debt advice space is really trying to solve things. And I think one of the keys to that is going to come through open banking data. Many organizations now are increasingly using open banking data, particularly a lot of the credit organizations now, the lenders, and using that to make their affordability checks and credit reference checks and so on, departing from the standard credit reference agency checks. And so they have that information now. And I think what is needed is much more of a regulatory focus, I think, around the use of that data for the monitoring of people's financial situations. And by using that data in a much more appropriate way, I think, because I think it's being used to kind of onboard people and sell products, but I think it's not at the stage where it's being necessarily used effectively to understand what the impact of some of those products might be having on people, not just the products, but also the wider financial circumstances of individuals, and using that in a way, I think, more proactively to understand when people are starting to look like they're running into financial difficulty, offering help, signposting, whatever that support might be. So I think there's huge potential through the use of open banking data to do that a lot more effectively.